The key word here for the largest banks is resiliency. Resiliency of the balance sheet, resiliency of the business model, and resiliency of funding, even if that resiliency isn't quite as strong as I thought with interest rates at 3%. Interest rates at 5%, you know what, the title of our note today was, bank stocks have gotten palled.
Welcome back to the Warlords of Wall Street. Well, today, no other word to describe it, ugly, especially if you were invested in financial stocks, and we are. We were just mentioning to you the other day that we have a taste for the direction regional bank fund, and we like playing in the triple leveraged DPST, highly aggressive, and we've been stopped out twice. We run, as I've often advocated, we use a 5% stop loss every time we buy any position, because you just never know what you don't know. And none of us are trading with that type of inside information. You just don't know when everything's going to turn against you. And we've been wrong twice. We've seen a lot of volatility in the market with the short-term rates breaking up over or flirting with 5%. The 10-year is flirting with 4%. The inversion is creating a little bit of chaos in the market, and a lot of hand-wringing is going on, thanks to the Powell testimony over the last couple of days as well, telling us that 50 basis points may very well be justified. We'll find out here in the next week or so. Tomorrow is a big day, as we've mentioned 2 or 3 times. Tomorrow, payroll numbers will be coming out for the non-farm, and that is one of the tails which wags the Federal Reserve's board right now. They're going to want to see that. Next week will be a lot of CPI hot numbers. Combine that with today, the big news that really caused most of the problems with the banks was Silicon Valley Bank, SVB, essentially just crapping the bed. They came out with a huge unexpected loss, huge write-downs, and then there were systemic problems over at Bank of America. Everybody's worried because of Silvergate. All the big banks, on top of everything else, are reeling because of their exposure to cryptocurrency and what have you. Coupled with that, the salacious problems that Chase is dealing with because of Dimon and his lieutenants trying to protect Weinstein, maybe. Who knows? Weinstein, another sexual predator, Epstein. That ended up turning into a triple storm today, and it ended up taking our DPST down 20%. And thank gosh we got out with a 5% loss. Now that's 3 losses in a row for us. That's 15% total that we've lost on DPST, and it's a good thing we came out because it went down over 20% today. Well, just because we didn't take that extra ride of 15%, now we're in an interesting position that with 3 losses in a row, not being right for 3 turns now, we've lost 15% of the money that we began with DPST. And yet, we find ourselves 15% below where we exited. So if it merely goes back to where we thought yesterday was a pretty good place to be in it at $20, we're going to make 25% coming back from here. That's the power of being able to buy at the lower levels without taking that ride down. You can't take the ride down. At $15, to make 15% back on my money because I have more buying power down here, I don't have to make the 15% like I had to. I only have to make a couple of $3 now on the swing, and that is easily achievable in this position. That's why you have to use the stop losses. And conversely, when we are satisfied that we've achieved our profit margin of typically around 10%, we will go ahead, and once we breach that, we will slide in a very tight stop loss that's going to be based on either a dollar or two behind it, to where if it continues to go up, we'll continue to take the ride with a particular position. And if it turns out that we've captured most of it, and it gives back that dollar or two, bang, we're already out because a trailing stop loss ratchets up to wherever the high is. If it's a $2 trail, wherever that new high sets, it trails only by $2, and that's where the line in the sand is drawn. If it moves up another 50 cents, well, then our line moves up. Well, still $2 behind, still moves up a high water mark for another 50 cents. And then if all of a sudden it comes down on a particular moment and takes us out, well, then it takes us out, and maybe we got an extra dollar or two. So other than that, we're waiting for the farm payroll tomorrow. We're waiting for the CPI numbers all next week. That will certainly be the tail that wags the dog in this market. This is going to be a short report because there's really not a lot to talk about. The market didn't like what it saw. It hates when its banks are getting beaten up, and today was no party for the bankers. They led all of the indexes in losses, and we got to take that ugly ride with them for a little bit. Stay safe, keep your powder dry, take your profits where you can. We'll talk to you tomorrow.